So if you're invested in cannabis, you've seen quite the roller coaster after the elections. All the optimism went through the roof. January alone was quite spectacular, but everything since then has been pretty devastating. I think there's been a Fibonacci retracement about 68%, if I'm not mistaken. And so that begs the question: are investors too focused on the forest and missing the trees? This is a report from Viridian Capital Advisors taking a look at cannabis adjusted returns just a week after announcements. So this is kind of looking at to see if this is truly an investment opportunity or if it's just fundamentally driven on news and excessive amounts of public relations that we're so familiar with Canopy and Tilray, where there's not a whole lot of progress in terms of financial accountability. There hasn't been a whole lot to be proud of in terms of what, in my opinion, Aurora and Canopy have been able to produce relative to the amount of public relations, the PR, the news wires, all of the noise. We can get through the noise. Maybe we can see the forest through the trees. Let's dive in and take a look.
It's only entertainment.
Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business Podcast. So the graph essentially is kind of showing a percentage return on the alternative harvest ETF, ticker symbol MJ, the week after major cannabis legalization news were announced. So this is fundamentally driven. This isn't technical analysis. This is just kind of a news and PR driven. So what Viridian has done, they've subtracted the returns on the S&P 500 for the same periods in order to eliminate the effect of the overall market movements. So the results were kind of counterintuitive. Viridian believes that each incremental state legalization would add an overall boost to the market, but that doesn't appear to have been the case. So the only two events that actually produced a net positive return were nationwide in scope, that being the presidential election and the Georgia state elections, which flipped the Senate to Democratic control. We saw a massive spike after that. For that we announced a month before, were pot stocks poised for a breakout with the election? Yeah, they were. Crazy amount of cash flow, money came in, but people quickly took their profits. And so if you came in late, if you came in February, you saw a massive decrease in your portfolios is trash. There are some opportunities. We're looking at APHA, AFRIA. As soon as it comes down to 200-day moving average, price buy-in is between 980 and 920 that we're looking at, with an exit to close our positions close around $21. That's at the first wave or the first movement. We could see more than 100% increase, but that's going to be our marker to get out of the market. Having said that, there's not a whole lot that has happened since. So from the election, from the Georgia runoff, not much has happened. So we're still waiting for pot stocks like Afria to pop. But we're just got to wait and see what happens. So when we break it down and we look at even individual companies, you're seeing GTI, Cresco, they were down in the week after Illinois legalized recreation use. VIREO was down the week after New York legalized. So this is maybe some folks taking profit off the table too early. Doesn't really make a whole lot of sense to me. From a technical point, you'd have to take a look at that on a graph. Like we mentioned with Afria, there's a lot of technical points to that. Fundamentally, well, who cares? Fundamentals have been dead for a long time. So Viridian believes that investors are going to pay too much attention to the federal picture and understanding of the importance of huge state markets that are opening, like New York, New Jersey, and potential Pennsylvania, but failing to kind of look at some of these individual opportunities, like we mentioned with Afria, and then Viridian mentions GTI, Cresco being down after Illinois. So if there was any companies in New Mexico, they probably saw the same thing with the potential to rebound. So a lot of speculation in the US as some of these private companies are going public, people kind of coming out of the Canadian marketplace, which, tends to be a little bit frothy up there. They've been open for a long time on the public markets, whereas now I think that shift is going to be happening more down here in the US. I think there's more opportunities for advancement as the stock is concerned, but this isn't stock advice, so it doesn't matter. With that, we're gonna roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.